Welcome to Pinvest.TV, India's first real estate channel. Let's dive into latest property news from international market. China is expected to reduce interest rates on over $5 trillion worth of mortgages as early as this month, according to sources familiar with the plan. This move is part of the government's efforts to lower borrowing costs for millions of households and boost consumer spending. Banks are currently preparing for the rate adjustments, with some homeowners possibly seeing an immediate reduction of up to 50 basis points. While the exact timing remains uncertain, sources suggest the process will be completed in 2 steps, amounting to a total cut of around 80 basis points. Both the People's Bank of China and the National Financial Regulatory Administration declined to comment on the matter. Earlier this month, Bloomberg News reported that officials were considering allowing borrowers to renegotiate their mortgage terms before January, the period when banks typically reprice loans. The decision comes amid growing concern over weak domestic spending and the threat of deflation. While mortgage rates in China have hit record lows, many families haven't benefited as their loans won't be adjusted until next year. This has led to a rise in early mortgage repayments and dissatisfaction among homeowners. At present, the average interest rate on existing mortgages in China is around 4%, compared to 3.2% for new loans on a first home and 3.5% for a second home. With the country's outstanding mortgage balance at $5.3 trillion by the end of June, further rate cuts could pressure banks, which have already seen their profit margins shrink to a record low of 1.54%. Shenwan Hongyuan Group analysts estimate that a reduction of 80 basis points would save homeowners over 300 billion yuan in annual interest expenses. The potential move comes as concerns grow that China may miss its economic growth target of 5% this year, alongside a deepening sell-off in Chinese stocks that is shaking confidence in the world's second-largest economy. We value your input. Your feedback shapes our content. Thanks for watching Pinvest TV.